Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Saturday, August the 28th, 2010. I posted commentary on YouTube last week, which I normally don't do it every week now, but I'm not going to be able to post next week, so therefore I'm going to post this week. Besides the fact, I thought it best to just to point out some hypocrisy and one of the reasons why I started the Contrarian Trader. And this is a perfect example. Let's go to Intel's earnings report back in mid-July. This is from Seeking Alpha. This is a blog from Dr. Stephen Loeb, and it was the headline was similar to what you would find across the board. I mean, when I first found out about Intel's earnings report, remember I was short the market at the time, which I still am, and I saw the Business Wire press release come across, and it said that Intel's best quarter ever, and reading headlines automatically you're short, your heart starts pumping. So you take a look at Dr. Loeb's article blog. It's titled Intel Reports Blowout Quarter. This is on July 15th, shortly after earnings announcement. And you always want to take a look at, first on a tech company, their margins, which were very, very good, and their forward-looking guidance, because that's what's most important, is a forward-looking guidance. And Intel's forward-looking guidance also beats expectations. So they guided higher on their last earnings report. Now, yesterday, this is just over 1 month after they reported earnings. Just after 1 month. What's the headline on Friday morning? Intel lowers Q3 outlook on PC slump. They didn't know this a month ago. They didn't have an inkling a month ago. I doubt that. See, to me, this type of behavior is completely unacceptable, and it's the reason why I started the Contrarian Trader. I started the Contrarian Trader with people like Bernard Ebbers allowed WorldCom to go down. This type of lying, this type of disinformation by publicly traded companies is just horrible, and it just burns people right and left. The small investor is burned. You have fewer people investing in stocks now than you have in the past 25 years. Why do you think so much money is flowing into treasuries right now? It's because people are afraid of the market. These boom and bust cycles are killing people. You have the baby boom generation who thought they were going to be able to retire, unable to retire. And they're afraid of the stock market to get that higher yield, that higher return, because they've been burned so many times. The system's broken, let's face it. So that's why you need a trade coach. And that's exactly what I'm offering. Now, I stayed short the market, and you may ask yourself, why? How did you know to stay short of the market, specifically a big position in the TZA, which is the 3 times short of the Russell 2000? Why? Charts. Money doesn't lie. When you see the chart go down, it means money is leaving the stock market. Let's go back to where Intel reported earnings right here. The stock initially rallied, and which is expected because you have short covering and you have the silly money that chases the stock. When I say silly money, it's people that see Intel reports best quarter ever. They see that headline, they don't read the article, and even if they did, they were misinformed anyway. So they don't get the game. So what do? They go rushing in to buy the stock, thinking that Intel is going to go back to its all-time high, and it doesn't. And you could see this type of candlestick action here is just an ominous sign. So if I see this ominous sign here, this topping tail, massive topping tail, same thing again here, and the silly money continues to try to rally this stock, you know that it's only a matter of time before it rolls over and heads lower. And not only after Intel raised their earnings guidance for the next quarter, or the full year actually, it not only did poorly, it underperformed the market. Here were the July lows at 1882. You could see we broke down below there and proceeded lower. Now take a look at the Dow Jones Industrial, of which Intel is a member. Yes, the Dow Jones Industrial did roll over this month, as did Intel. But what did the Dow Jones Industrial average not do? It did not take out its July lows. Therefore, Intel underperformed the entire Dow Jones Industrial Average. So the talking heads on Friday came out, and they were on CNBC, especially Fast Money after hours, and of course, everybody was bullish in the market. Beautiful reversal, which it was. I can't lie. It was a beautiful reversal. I got to be honest with you. We're going into the weekend. I'm long now of Intel, and I sent out an alert to my subscribers to get long of Intel, and we're going to take advantage of this rally that we see here. And with the TZA, we took profits not just on Friday. We took profits early in the week, and thank God we did, because now we're down trading below where we took our profits. So you need to understand when to start legging into a long position when the market's in a downtrend, and when to start taking profits, and that's what I do. So I will be putting together a members commentary similar to this video, but a lot more detail of what our plan is for the coming week. And the coming weeks, and I'll touch upon a couple of stocks that came up on my screen. One is the PST, which is the ProShares Ultra Short Treasury Fund. It's the 7 to 10 year bond fund that it's short. This is a very volatile position, and I wouldn't suggest that anybody go running into this position on Monday. I have no intention of doing that. So just be forewarned. Don't go chasing this. All right, it's not the time. What you saw here was short covering rally on Friday. What you want to do is you want to see a retest, but there's a specific reason why I want to get long of the PST, because the treasuries are the new bubble. I do not believe that bubble is done yet. Bubbles just don't go away immediately. I mean, we're not that oversold yet, but we're getting there. We're certainly getting there. So please be forewarned. Don't go jumping into the PST. If you want to know why we're going to join in on the PST trade, that's important to know. That's my job, is to educate. Secondly, my second tier of my job is then to alert of when I'm entering that position. So I need to educate the trader first, so that they can make an informed decision of whether or not they want to join in. If they don't, so be it. That's fine. But at least you'll know the reasons why I am entering the position, so that you're educated when I'm entering the position. Please, let me just redefine what my job is to my members. It's first to educate, provide commentary of what I think is going to happen. And let's take a case in point. I told my members to get long of Intel. We were long of Intel in advance of this performance here on Friday. So we're going into Monday already long. And I told them, get out. Let's take our profits. We've been trading the TZA here for the longest time, and we made a lot of money on this trade. And we'll look to get back in here, no doubt about it. But right now, we're out of the TZA. I do, for a disclaimer, I did write puts on the TZA the day we did get out. Small position. Now, writing puts is for sophisticated options traders. If you want to learn more about that, shoot me an email, and I'll do so. But in essence, it lowered our basis cost by taking in that premium to $34 per share. So if TZA trades down to 34, I'm still making money on that position. If it closes the September option expiration date out above 34, we've made money in that position. If it closes below that, then we'll start to take a loss. But no big deal. I plan on getting back into this trade anyway. So it's a very small position, but I did want to have a leg in on TZA, but I wanted to hedge that position somewhat. So we do have longs in other positions as well, and we've been opening them up over the past week. And that's it, folks. If you have any questions, shoot me an email. Please take advantage of the 14-day free trial offer. I beg of you. You can always cancel out through PayPal. Give it a shot. Right now, we are in the sweet spot of this market. We're going to take advantage of this rally that's up and coming. But you need to know that what's important to remember is that on Labor Day, you're going to have the big money come back into the market. And the decision is going to be is whether or not they keep this market above the 1050, 1040 level, or do they sell it all? And I'll be watching the price and volume action on the S&P 500 and on the Dow Jones Industrial Average to see what I believe is going to happen. And if we rally from here into the Labor Day weekend, the probability that they're going to sell this market off, the big money, when they return on that following Tuesday from Labor Day weekend, grows exponentially. So just be forewarned, okay? If we stay in this trading range here, 50-50 chance at this point. GDP revision for Q2 came out on Friday. It came in worse, less than expected. This rally here had to do with shorts being afraid of the new merger Mondays that has come back in over the past 2 Mondays. So shorts didn't want to go into this weekend short. That made up for a good deal of this move here. My members knew that. And I sent them out that commentary on Friday morning advising of it when we would be selling off. Don't get short this market on the sell-off. Be prepared for a short covering rally into Friday afternoon due to merger Monday fears by shorts. And that's exactly what we saw. So be careful. Have a great trading week. Have a great weekend. And if you have any questions, shoot me an email. Join us for the 14-day free trial offer, please. Thanks. Bye-bye.